The construction industry can be a tough business to crack. From cash flow problems, struggling to find skilled labour, and not making enough money for your efforts leaves many business owners feeling frustrated and burnt out. But when you get the business strategy right, it's an industry that can be highly satisfying and financially rewarding. I'm here to give you the resources to be able to create a construction business that gives you more time, more freedom, and more money. This is the Develop Your Construction Business podcast, and I'm your host, Greg Wilkes. Nice to have a bit of a different podcast on today. So welcome to those that are joining us on YouTube or just listening. So we've got William and Petko. Have I pronounced that right, Petko? Yes. Excellent. Two fantastic guys who are in the financial services industry. Now, the reason this is going to be of benefit to my listeners is because we're all coming out of the pandemic and we've got a little bit of a mini boom happening in construction at the moment. But sometimes we need a little bit of support financially in order to be able to grow the business or just get out of the back end of this pandemic. You might need a bit of support to do that. So there's a lot of confusion over what government schemes are available at the moment and what tax breaks and benefits there are. So William and Petko are going to clear all that up for us today and tell us how they particularly support construction companies with finances and funding. So over to you guys, William and Petko. So maybe you can give us a brief introduction on who you guys are and what got you into this industry.
Yeah, love to. Greg, first of all, thank you very much for having us on. Absolute pleasure.
Excellent.
What really got us into the industry? So, I mean, to start with, I think it's, all businesses have somehow been affected by COVID in the last year. And for me, it was all about, I come from a commercial finance background, and I decided to start my own business now, really with the sort of drive to get this information out to businesses, because I think it's so important at the moment that business owners, directors, accountants are all aware of the schemes that are out there. And for me, I really enjoy helping people, and I think there's no better time than right now to help other businesses and just get out of this bloody awful pandemic and just move forward and push on.
Yeah.
So that's why I'm here. And
so I mean, my background is a little bit different. So I've got a project management background. So okay. I've got a master's in business management, and as Will said, we align on our core beliefs of helping people, making sure that we provide the greatest value. And we decided to kind of team up and see how we can, make a positive impact in the world. And this industry gives us a real base to help organisations, especially with the difficult time that they've had the last 18 months now.
Yeah, that's absolutely fantastic. And at the end of the day, construction companies, specifically my niche, we do need help. It's a tough industry to be in. Funny enough, in the pandemic, a lot of construction companies did do okay. They managed to sort of ride through it. Out of all the industries, it wasn't one of the ones that got closed down. But at the same time, there's a lot of skilled labour that has left. Homeowners might be, were a little bit tighter about what they wanted to spend. So, the construction industry has taken a knock, and people are coming out of the back end of that now. And we do need support to be able to grow businesses. So it's great to have you both here today just to help us discuss that. So a few things we're going to look at today, two main issues. We want to know really what government schemes are potentially out there at the moment that construction industries can take advantage of, if you can help us with that. And the second thing, we're going to look at how companies can get some funding and finance if they want to be able to grow their companies rapidly. So I think you can help with that too. So just thinking about it at the moment. So we've got, as we said, we've got a little bit of a mini boom, you could say, in construction at this stage. Everyone I speak to, all construction companies, they seem to be absolutely flat out, which is great. We need that. So what tax breaks or incentives are the government's currently offering for companies that want to invest in their companies and grow and take advantage of this mini boom?
So we're actually really excited to start talking about this and just get the information out. But the main one really is super deductions. it's got a sort of jazzy name, super deductions. It is pretty super. So the core of super deductions really is for a business owner, if you're planning on buying, let's say you're in construction, you want to buy some plant, you've got a 100k purchase you want to make for that bit of plant, you can now deduct 25p for every pound that you spend on an asset. So let's say on that bit of plant that costs you £100,000, you can now deduct £25,000 from your corporation tax, which gives you a saving of 25%.
That's absolutely huge, isn't it? So, and I don't think we've seen a scheme like that, recently, have we, of such good sort of tax deduction on that amount. So,
I mean, I'll give your viewers a different perspective. So, as business owners, they'll know that they submit their accounts at the end of the year. Their accountant goes through certain procedures and they used to deduct 19% of all their purchases and expenses.
Yeah. So
an easier way to look at it, rather than 19 at the end of the year, you'll get returned 25% of all your purchases.
Yeah.
So any asset that contributes towards the growth of the business.
Yeah. Fantastic. So that's a big boost, isn't it? A significant difference.
A key thing to note on that, Greg, is even if a business owner decides to use asset finance to make that purchase, because obviously cash flow at the moment, I feel like, is absolutely, the core of every sort of business owner's thoughts at the moment. Even if you use asset finance on that 100k bit of plant, for example, you will still reap the benefits of that super deduction in year one of the agreement. So when your year end comes up, you don't have to pay that asset off before you actually reap those benefits.
Yeah.
You can still get it in your first year end coming up.
So that massively helps cash flow, doesn't it? In that first year, that's a huge tax break. So that's really good. So why would it be a good time at this moment? Why would companies be considering doing this at this particular time? Is there any benefits to doing it now?
I think the answer to that is, at the moment, there's a boom. Take advantage of the boom and just push forward. Why not take advantage of it? It's a big opportunity. I think for business owners, if you're in that mindset where we're doing well, let's take advantage, let's grow, let's push forward, you've instantly got an advantage over all your other competitors who are still sitting there thinking, well, not too sure what we're going to do, let's just ride it out. The key thing to note about asset finance as well is that the agreements are actually secured against the asset, so there's minimal risk to the business owners.
Right.
Yeah,
that's quite important.
Being realistic, this pandemic is going to go away within a year or two, hopefully, fingers crossed. So at the moment, the government is incentivized to get the economy back to normal. They understand that they need to incentivize businesses that have developed and grown to spend within themselves. So it's just a no-brainer to utilize the benefits from the government for this year as they're out there, because so next year these kind of incentives are going to go. And
well, that leads on to the next question. So at the moment, how long are they pushing this incentive for, this super deduction?
It's until 2023. You've got until.
Yeah. Okay. So that's quite a short window, isn't it? There's that comes around pretty fast, really. So really now it's a great time to be considering that. If you're thinking of expanding in your company, you want to get some plant, or you want the business to grow and you need a bit of finance and funding to do that, then now's the time to think about that super deduction. So that's really helpful. If we focus on what the super deduction can be used for, specifically relating it to construction companies, what sort of things could a company buy? What would qualify for this deduction?
That's a great question. So anything from company vans to company lorries to diggers, bulldozers, solar panels, computer equipment. It's anything that actually generates the business revenue.
Right. Yeah. So that's a massive list then, isn't it? That's really useful. So we're potentially talking about, it doesn't have to be, we mentioned earlier about, spending £100,000 and making 25,000 back. If we've got construction companies that are listening to this that might be a bit smaller and they're just thinking, I just need to buy a new truck or a new van for £10,000 or something, it's still going to apply to them too.
Yeah, exactly. Exactly that. And do you know, an interesting one is, you know, I feel like there's still a little bit of a negative connotation out there that's attached to finance. Sort of maybe the mindset of, if we've got the cash to pay for it, let's use the cash to pay for it.
Yeah.
But 100, let's just take an example of 100K, for example. 100K in cash at the moment is a lot more valuable to a customer than it being spent on all of that 100K being spent on an asset.
Yeah.
And the way that asset finance can really help you grow is, for that same 100K, you could have 2, 3, 4, 5 assets, and actually use asset finance as a tool to get more than one set of return on investment. Because if you spend that 100K, you're actually getting one set of return on investment, and you've lost your 100K. I could actually show you a PDF to go through it if you'd like to.
That'd be brilliant. I'll tell you what, I've got that, because you shared that with me earlier. I've got that PDF here, so I'm just going to share that to my screen. So this is the illustration.
That's the one, yeah. That's the
So
one.
just so this is great for those on YouTube that are watching, but for those on the podcast, we'll just explain through as best we can this this diagram here. So go for it, William.
Yeah. So let's just forget about the bottom half for a second and just focus on the top half. So how to grow in 1994. So, you know, a little bit of a sort of joke there, but in all seriousness, so on the left here, you've got 0K. So that's how much you've got left to play with. Let's just say in this instance, the customer's got 100K to spend. They've spent it. They're left with 0 in the bank. They've made their purchase for their plant or machinery, and they're now generating one set of return on investment.
Yeah. Yeah. So that plant's out there working for them, but they've spent their 100K. So they're making money from using that plant, but they're left with 0 in the bank until their return on investment starts.
Exactly that. Let's now look at the bottom half. So if that same customer with 100K in the bank decides that in actual fact they're going to use asset finance to help themselves grow, each asset costs them 6K deposit. So they're putting up 3 lots of 6K, which leaves them with 82,000 in the bank.
Yeah.
And then they're buying 3 assets, and they're actually generating 3 times the return on investment.
Yeah.
So not only are they left with £82,000 in the bank and 3 assets, they're also going to receive, and this is key, a super deduction of £75,000 when their next corporation tax is due.
Yeah. So just to make that clear then, so they're buying, so this would be companies that, you know, aggressively want to grow and expand quickly. So they're buying 3 pieces of plant at £100,000, but they're only putting 6K down and using asset finance to pay for the rest of the plant. Is that right?
That's exactly it.
Yeah.
And, you know, a good example that would be given here is, if you were going to employ a marketing director to do, you know, sort of 5 years work for you, you wouldn't pay that marketing director 5 years salary up front. You would pay that marketing director on a monthly basis whilst he or she generates you revenue for the business. So it's a similar concept.
Yeah, that makes complete sense. Yeah. So this is really key. So I just want to run through this again for my listeners. So if you're really interested in growing quickly, now, as William's just pointed out there, you can go and spend your £100,000, do it the old way. You spend your 100 grand. Okay, you haven't got any debt, but you're only getting a return on investment for 1 piece of plant. That's, you know, that's if you do it the old way. If you consider asset finance, you can literally get away with just putting down a smaller deposit. You could buy 3 pieces of plant. So in this example, we're buying 3 pieces of plant at 6K each. So we're only outlaying £18,000 rather than £100,000. And we're getting 3 times our return on investment. We've got 3 income streams coming in. And you get this huge super deduction at the end of your corporation tax year of £75,000 on that purchase. Is that summed up right, William?
That's summed up right. And also, you know, for anyone out there that's sort of thinking, you know, well, you know, it's a bit of a risk. We're not too sure how the next few months are going to pan out. as sort of mentioned previously, the finance is secured against the asset.
Yeah. So just to explain that a little bit more, if it wasn't secured against the asset, what would that mean? What would it be secured against?
So, you can do like a personal guarantee, director's guarantee, or a, company guarantee.
Yeah.
I think the key here is really, with a positive mindset, with ambition and wanting to take advantage of the current situation, there is no better way to grow than at the moment. Business owners have a massive opportunity at the moment to grow. And really, I think anyone that chooses to go down this route has got a massive advantage over their competitors.
Yeah. And I just want to come back to the risk again, because obviously business is all about managing risk, isn't it? We've got to, if we're going to grow, we're putting, things on the line to try and do that. But at the same time, as a business owner, you need to protect your own personal assets, your own house and whatever else, if you've got, family and whatever else. So where if the debt is secured against the asset rather than as a personal guarantee or whatever else, you've got real protection there, haven't you? So if things really did go wrong, it just didn't work out for some reason, there's a massive recession and something happened, an unforeseen event that happens, all right, you might lose the asset, you might lose a piece of plant, but you're not losing your house over it. Is that a fair assessment? Yeah.
Exactly. Absolutely.
Okay. So that's really important for my listeners to know. So that's really good. So just looking at this as a I've been a business owner myself in construction, and this obviously looks really, really sort of appealing. One of the barriers that is there that I would see as a business owner is getting the initial deposits together for buying this plant. So when I look at this, I think, well, who's got 100K sitting there anyway to go and buy a piece of plant out there? There's not that many people. So how would they start getting access to funding and deposits? How would your company help with that? Would there be a massive outlay that's initially needed, or what could you do to help with that sort of funding?
So when we initially started our business, we kind of started with a partnership with an accountancy firm, which kind of gives us a great leverage of over 150 lenders, which it gives us the capacity to drive down the terms and rates for our customers. Most other brokers have less than 100. So having that capacity of lenders gives us a great opportunity for our customers to try different ones for them, to make sure that we get the right requirement based on what they need.
Yeah.
And do you want to?
Yeah, I mean, I think the key to note as well is that, not in all cases you don't have to put down a deposit. It's quite flexible. You don't have a deposit to put down. You don't have to. In terms of, that side of things, it's very flexible. Like Petko says, we actually have access to 150 lenders. A good way to think about it is when you go to do your car insurance, let's sort of simplify this a little bit, but when you go to do your car insurance, you'd go through maybe Compare the Market, Money Supermarket. The reason you're doing that is because, well, you're comparing your prices against a great market share, and that's what's giving you the deal there. And it's our job as a financial intermediary to actually back those lenders back and bring value to our clients. That's what we're here to do, to push back on the lenders and actually find the best rates, terms, and ultimately deliver the best service to our clients.
Yeah, no, that's really helpful. So obviously everyone's circumstances differ. There'll be some that can put down, deposits because they want lower payments. But what we're saying is you guys are pretty flexible. You've got a massive range of options out there. So even if someone was listening to this and thinking, I'd love to buy that piece of plant, I want to buy that JCB, or I want to buy that whatever they're going to buy, but I haven't got a huge deposit to put down, but I'm really keen for business growth. Really, they need to be talking to you guys just to think about what options are out there for them, because they might not have to put anything down potentially, which is massive, isn't it? That's really, really, really helpful. So just shifting tactic a little bit, I think the super deductions, that's nice and clear for me, and hopefully for my listeners now. I think that's an absolutely fantastic opportunity out there that people want to take advantage of. But just want to shift focus a little bit. We've got obviously a lot of companies that at the moment they've gone and taken them out, Sybil's and bounce back loans, things like that. So some companies are built up there. some companies I know have tied themselves into really poor rates of CBIL stuff. They were just desperate to get whatever was out there at the time. And they've got, really poor repayment rates. And the difficult problem is now is it's coming to that time of year now where these repayments are going to start kicking in. For some, it's probably already started kicking in. Some, it might be a few months down the road. And that's going to really affect cash flow and different things. So just coming back to you guys about what support is out there at the moment. Again, we're talking about government schemes. Is there any other government support schemes out there that could assist construction companies at this time?
Yeah, absolutely, Greg. So, you're spot on there. We haven't recovered from this pandemic yet. It's obvious. We're on the uptrend. We're moving forwards. I think, personally, if you ask me, I don't think there'll be another lockdown. I think that's it. We're going to push forward. And I think, sort of coronavirus will become like another flu. But ultimately for businesses, I think cash flow is important. And like you say, making those payments. Many business owners have got those big capital and interest payments to start making. If you took a £250,000 CBILS, for example, that might be anywhere in the range of sort of maybe £5,500, £6,000 a month. That's a massive payment that these businesses have to start making. So it's a really good point. And the good news is that with the recovery loan scheme, which is actually another government incentive that's been released to support businesses, is that you can a lot of our lenders at the moment are talking about actually bringing a product to market that's going to be interest-only payments for 12 months. Mm-hmm. The recovery loan scheme was mentioned on the first released on the 6th of April, but a lot of the lenders are still actually getting accredited by the British Business Bank. So okay. It's not a product available at the moment, but in the next few weeks there will be. So to give you an example, let's say you took out £250,000 CBILS, you've got to start making your payments in, let's say, June, July. You can then flip that over onto a recovery loan and make interest-only payments for 12 months to help your cash flow. The good news as well is that that recovery loan is 80% backed by the government. So they're taking the risk away from business owners and saying, look, we understand, we'll guarantee it for you. And yeah, you can flip that CBILS over into recovery loan.
Right, so that's fantastic. So potentially they're delaying the capital payments for another 12 months. You're literally only just paying interest for 12 months. So, yeah. So I think, that is perfect, isn't it? For companies that are just trying to get themselves back on their feet, but they're not quite there yet, that could be a really, really good option for them just to assist with cash flow and get through the next year. So that's
falls within this category as well. So if they've taken a bounce back loan, which is a little bit less than 250, but still, like the government has understood that the support they gave last year, it kind of got everyone on the right track, but it's not enough. So they've kind of understood, let's support the economy, let's support the country, let's give them another year on low interest payments. And the good thing is the recovery loan is up to 6-year term. And the benefit is the money that, so for example, if you took a 50K loan, 50K bounce back, you can get the recovery loan, pay off that 50K bounce back loan, and then the rest of the capital you can inject it in on any part of the business. So whether it's marketing, winning new contracts, so employees. So there's no like specific. They haven't specified certain areas where it can be used. So any aspect of the business can get utilised on.
That's really, really helpful. Yeah. So just to add to, I know that I know this isn't for you guys so much, but more for my listeners. Obviously, the bounce back scheme, there are other options. So if you have got a bounce back loan or a CBILS with your bank, they are offering things like pay as you grow and things like that, and delaying the repayment. So none of us here are. I don't think none of us are FCA. I'm certainly not FCA accredited. I'm not sure if you guys are. So any advice we're giving you here, we're just giving you some options. We're not giving you actual advice to take up on this. So you just need to speak to your accountant, speak to your banks, and before you go and take any of this up. So go for it. Sorry.
Reach out to us.
Leave it up to you.
Reach out to us.
Exactly.
Reach out to you.
I think it's key to mention that we're partnered up with an accountancy firm called Sejulo, who have got offices in London, Liverpool, Leeds, Manchester, and just upstairs we've got a room of 20 accountants. So we're up to speed on all of the government incentives, and in terms of accountancy as well.
That's really good to know. Yeah. So if you're listening to this and maybe accountancy isn't your strong point and you're really not sure what options to go for, then reach out to William and Petko, and they can, they're going to just point you in the right direction. And
one thing to mention as well, Greg, I think this is key, is the recovery loan scheme. The way to look at it as well, it's a big chunk of cash that can be used in the business for whatever you like within the business, that's guaranteed by the government. So it's taking the risk away from business owners, and they're saying, here you go, if you want to invest within your business, if you want to grow it, take this, use it and grow.
Yeah.
So it's not just for struggling businesses, it's not just for businesses that haven't done so well, it's also for businesses that want to grow, that want to push. The government understand that, look, the way to get the economy back on track at the end of the day is to help these SMEs grow, because ultimately these are the people that are employing people, that are paying taxes. So it's the way to get the economy back on track.
Of course, yeah, that makes complete sense. And I guess this recovery loan scheme is a lot more flexible in some ways to the super deduction. We've said the super deductions to use for purchases like plant and whatever else, exactly. Whereas this could be used for anything, couldn't it? If you just need it for cash flow or wherever it's going to be, you can use that. What sort of amounts can you get on the recovery loan scheme? Is there caps or minimum amounts at all?
Yes, so up to 250,000 backed by the government, but the actual amounts that you can get are anywhere from, I believe, in the sort of £10,000 range up to sort of 10 million.
Yeah. That's great.
And the benefit of so up to 250,000, there's no guarantee from the business owner as well. So just like the asset, the super deductions is guaranteed on the asset. Anything below 250k, there's no guarantee from the director or the business on the amount.
Right. That's quite significant then too, isn't it? Yeah. So yeah, that's really interesting. Is there anything else here that needs to, anything we've not quite covered, chaps, on these two things that you think is important for listeners to know?
Yeah, I mean, I think lending is changing. There are lots of different products out there. It's not just as simple as well as, always lending money. There's a lot of ways to release value from existing assets. For example, let's say, just to give you one example, let's say your haulage firm, you own 10 trucks, you want a cash injection, you've paid for those 10 trucks, you need to get cash into the business. You can release equity from your assets and inject that into the business. So that's just one example of a way that you can sort of switch and swap values around within your business. It doesn't always have to be a case of, we need to borrow money, or if you've got existing value within the business, you can also release that equity.
That's really good to know. Yeah, that's really important. So there's a lot of options. So I think really that the crux of it is if you're looking to grow as a business, you're going to need help financially to do that. It's money and cash flow that's king, isn't it? Really, to business grow. And if you're going to do that, then really they need to come and speak to you guys and work out what is the best way forward. It could be a recovery loan scheme, it could be using the super deduction, or it could be releasing equity from the existing assets that you got. So lots and lots of options. But look, guys, this has been really, really helpful for my listeners. So I really appreciate the time you've taken to talk them through that. If anyone wants to get hold of you too, what's the best way they can do that? How do we get hold of you?
The best way I would say is probably just to give us a ring. I'm sure you might maybe provide that information. Do you want me to give a number?
Yeah, say your number now, yeah. And you.
Also, so our name is Commercial City Group. So that's kind of, we have a website if you guys want to go and check us out. We'll provide some details, emails, and we're looking forward to see how we can help any of you as clients, and
best way, go to our website. We've got our number on there. We're always open to having a chat. Look, this is what what we love. This is what we're passionate about. I think you can probably tell from the other way that we're speaking and whatnot that we're really passionate about it. And we really believe in, you know, chasing value and adding value. That's the most important thing at the moment, you know, to sort of help business owners get back on track. So if you just want to give us a call, have a chat about things, we're more than happy to do that as well.
Yeah. So I just want to thank you both. That was really, really refreshing to see two sort of young lads hungry to help, hungry to help the construction industry. So this is going to be, you know, really useful for my listeners. So if you want some help, go and see William and Petko at the Commercial City Group, and they'll be sure to sort you out. So that's the end of this podcast. If you've enjoyed that, then please give us a like and subscribe, and we'll be back next time with another hot topic that's going to help your business grow. Thanks, guys.
Thank you very much, Greg. Real pleasure. Cheers.
If you'd like to work with me to fast track your construction business growth, then reach out on www.developcoaching.co.uk.